The truth is rarely pure and never simple. That's Oscar Wilde. Welcome to the Deep Dive. We're here to, well, cut through some noise on a really critical topic today. There's been a lot of talk, a lot of headlines about the recent surge in global oil prices, geopolitical tensions, So the big question is, what does this actually mean for India? For India's economic resilience? We're going to unpack insights from a recent piece in a leading financial publication. Definitely crucial stuff if you're preparing for the UPSC exams or, honestly, for anyone just wanting to understand global economics better.
Exactly. That's our mission today. Because, look, the immediate headlines, they might make you think, uh-oh, here we go again, crisis looming for India.
Yeah.
But when you actually dig into the data, the underlying numbers, it paints a much more, nuanced picture. And frankly, it's quite encouraging for India right now. So we're here to give you that context, help you see past the initial alarm bells.
Okay, great. Let's dive in then. The immediate trigger, and I'm sure you've seen this, is the conflict in the Middle East. Flared up about 2 weeks ago. And almost instantly, we saw crude oil prices jump. What was it, 13.7%?
That's right, a sharp jump.
And then there's this background fear, this risk about supply disruption from Iran. I mean, they're a major producer. So that understandably makes markets jittery.
Very jittery.
Yeah, and you can see it in the OVX index that's like the VIX, but for oil volatility. It nearly doubled in just 2 weeks.
Doubled, which basically signals that the market expects price swings twice as large as usual.
Okay, so you take that, and then you remember India imports, close to 90% of its crude?
Almost 90%, yeah.
On the surface, that looks pretty grim, doesn't it?
Yeah.
We're extremely vulnerable.
It absolutely seems that way. But, and this is the crucial part, this is where looking back, looking at historical context really changes the perspective. What's fascinating is even with that recent jump, today's prices, around $70 a barrel, they're actually way lower than historical peaks.
Lower? How much lower?
Think about 2008. Oil hit $147 a barrel then. So today's price is less than half of that peak.
Less than half, okay.
But here's the real kicker, and maybe the most important thing for you to grasp. The rupee real price of oil.
Okay, explain that. What's rupee real price?
So that adjusts for inflation and also for the rupee-dollar exchange rate. It tells you the actual cost burden on India's economy in terms of our purchasing power.
Right.
And today's rupee real price, it's a staggering 66% lower than its peak back in 2008.
66% lower.
Yeah,
wow.
66%. So in terms of what it actually costs India, oil is dramatically cheaper now than during those past crisis periods.
That really puts things in perspective. It makes you question those scary headlines immediately. And if you connect that lower real price to how India's economy actually performed in the past, the impact of high oil prices becomes so clear. Like, think back to 2008, those soaring prices. India's GDP growth, it dipped way down to 3.1%.
A huge drop from the usual 7-8% levels.
Exactly. And similarly, 2011-12, prices were high again, growth slipped to 5.2%. Oil was definitely a major drag back then.
Unquestionably, it weighed heavily.
So given that history, what's fundamentally different now? Why is India seemingly in a stronger spot despite these new tensions?
That's the key question, isn't it? Why aren't we seeing that same economic damage today? Well, first, let's not forget inflation. High oil prices often mean high inflation. Back then, 2008 to 2012, India's average annual inflation was nearly 10%, 9.9 to be precise.
Ouch. Yeah, I remember that.
Compare that to the average since then, around 5.5%, much more manageable.
Okay, so inflation's lower now. But what's driving that difference, especially with oil supply?
The game changer, fundamentally, is the massive shift in global oil supply, specifically the rise of the United States.
The shale revolution.
Precisely. Thanks to technologies like fracking and horizontal drilling, U.S. oil production has, roughly doubled since about 2012.
Doubled.
It's made the U.S. the world's largest oil producer.
Right. I knew they were big, but largest.
Okay.
Yeah.
And that fundamentally changes everything. It alters the whole global energy map. It means the world isn't quite as dependent on or as vulnerable to supply disruptions from the Middle East as it used to be.
So more supply overall and less concentration of risk in one region.
Exactly. There's more flexibility in the system now.
Okay. So let's pull all this together for our listeners.
Yeah.
What's the bottom line for India right now?
The critical takeaway really is this. Given where oil prices are now, especially in those real rupee terms we talked about.
Right, the 66% lower figure.
Yes. And considering these huge shifts in global supply, thanks to the U.S., India's economy is actually far more resilient to these kinds of shocks than it was a decade ago.
So unlikely to be badly hit by the recent geopolitical stuff.
It's very unlikely to be significantly negatively affected, unless, of course, prices were to suddenly skyrocket way, way beyond current levels, back towards those old inflation-adjusted peaks.
Which we're not seeing signs of right now.
No, not at this moment. The market dynamics are just different.
It really shows how important it is to look past the immediate headlines, isn't it? Yeah. To dig into the data, the context.
Absolutely. It underscores that value completely. And maybe it leaves us with a thought or a question for everyone listening. In this world where we're just bombarded with information, snippets here and there, how often do we mistake one single, maybe alarming data point for the full complex picture?
That's a powerful thought to end on. A good reminder to always dig deeper. Thank you so much for joining us on this deep dive today. We really hope this discussion gave you some valuable insights, whether for your UPSC prep or just for understanding the economic world we live in. Please do like this, subscribe if you haven't already, and definitely drop a comment below. Any questions, any other topics you'd like us to tackle in a future deep dive, let us know. Your engagement really helps us keep this series going. Thanks again for listening.